Steve Gleason won the job, so let him be there. So, look, I'm glad you're here, and I'm glad you're here.
Thank you.
And thank you for coming. As you all know, he's trying to do something now that Republicans that's harder than Kitty Mouse said at Richmond, and that is enacting tax reform. So are you ready for some hard work?
Yes, sir. I am. As long as we can start with the acknowledgement that I'm wearing my Astros tie. Feel free to cheer whenever you want.
All right, so let's start with the easy one. Is the House going to pass the Senate version of the budget bill?
The answer is yes. We're in a good position. I think the work the Senate did ought to be applauded, and Chairman Black, who chairs our budget committee, worked with the Senate on incorporating some of our ideas, and so I feel real good about where we're headed on this this week, which with Carl accelerates for us tax reform by several weeks by getting this budget done, because that is, once it's signed, sealed, delivered, we'll announce both the date of the markup and the date that the tax reform bill text will be released. So once it's done, we're going to move.
I should have introduced myself. I'm Carl Cannon. I'm Washington University of Real Clear Politics. If you know Real Clear Politics, you know that we're nonpartisan. So let me ask a question that's sort of in our wheelhouse. The budget, passing the budget first so that you can do tax reform is so you can use the reconciliation process and really filibuster the Senate. But reconciliation is a Washington word. It's in the process doesn't, in normal English, reconciliation is not what it is. What it is one party rule. And the budgets have been passed this way since 1993. And I'm asking you sort of a good government question. Is that really the way it should do it? Shouldn't it be both parties? There's nothing moral. There's no moral equation if the tax rate is 38% or 37%. So why shouldn't both parties participate?
Well, moving to reconciliation doesn't preclude Democrat support or engagement in this process. It just ensures no one party in the Senate can block this from getting this to the president's desk. And so, I'm hopeful that we can, and on the House side, we spent the last year reaching out and listening to our senators, Democrats, about what's important to them in tax reform, because I think they're seeing the same thing we are, which is a lot of young people coming out of school can't find good-paying jobs. They're seeing the same companies we see moving their jobs and headquarters and research overseas. And so I think we share a lot of the goals of getting this economy moving again. I don't want to predict that we'll attract Democratic votes in the end, but I think the time we're spending with Susan Delbeni and others who are bringing, I think, terrifically good ideas to the discussion, I think it's time well spent.
So right now, the White House has endorsed a plan with these three tax brackets. There's 12%, 25%, 35%. On Friday, your predecessor of the powerful House Ways and Means Committee, Paul Ryan, threw out the idea of the fourth bracket. This is something that's been floated. I guess we could call it the Max Scherzer tax bracket, or George Soros, or the Donald Trump family bracket. But my question, where does it start? 1 million, 2 million? What are we talking about? Is it
So I do want to get ahead of our committee's work.
Well, I want you to.
I can look at you. So everyone is true. So I do want to get ahead of them. We are considering it as the framework with the President and the Senate, the tax riders laid out. We are looking at a bracket. Our focus is on delivering a very pro-growth, a middle-class tax cut, and a design of the code that grows the economy and paychecks in a major way. So we are looking at it from that perspective. Could a fourth rate help us deliver that growth and that middle class tax cut? And, we're still in the work and still thinking through the design.
Paul Ryan hinted that the rate would be 39.6% for this fourth bracket, which is the top bracket now. Does that number sound about right to you?
Yes, so no decisions have been made on that.
Well, you have declined politely, as you're doing here, to say where these brackets start exactly. And I think it's one question I have. Is that because you don't know and you're still working out the numbers? Can you make the numbers come out? Or is it because you don't want people taking pot shots at your plan?
It's because, unlike the Reagan-style reforms, which we model a lot of this after. The rates alone don't tell the whole story. Because we are eliminating the AMT, because we are eliminating the estate tax, and because we are making sure our small businesses, our passengers aren't left behind, those interact with those higher rates differently than just the rate cut. So we want to make sure that we are delivering top to bottom relief so that Americans keep more aware of what they earn. We want to make sure we know the interaction of all that. So it's just a case of being thoughtful, making sure we know the real impacts before we set the levels and where the brackets.
When Democrats talk about this, they talk about fairness, and that's something that I think most people care about. But it gets complicated, as you point out. If you make $400,000 a year in Rapid City, South Dakota, that's more money than if you make $400,000 in New York.
Yeah, absolutely.
So how are you going to how are you going to finesse this? And I'm thinking now, of course, of several things, but one of them is the deduction for state.
Yeah, no, it's a trick question. So there is so we're focused on growth of paychecks and jobs and leapfrogging America into the lead pack worldwide, including us there. Surprisingly, fairness plays a big role in that growth because, you just imagine the tax code so fair and simple. 9 out of 10 Americans could file using a postcard style system. There is a fairness to knowing what everyone's deductions are because we have and use exactly the same ones. Another reason we haven't set those brackets yet, and the rates are that we are working with lawmakers from the high tax states to ensure that their taxpayers are better off from tax reform than before. And so because we're eliminating a number of those deductions, that too plays into what will those final rates in the brackets be. So it's just a matter of making sure we're hitting our goals, including fairness and growth, before we set.
All right, so let's take, if you live in West Virginia, Harper's Ferry, and your coworker, you work at a plant, your coworker in Loudoun County, your coworker lives right across the river, who lives in Maryland. If you get rid of the state local tax rate, then that one person has got the tax cut, the other got the tax increase. These two people work side by side. One pays a higher federal rate. That just doesn't seem fair.
You're describing the current tax code.
If you eliminate the...
No, actually, I think you are. And here's my point.
Tell.
So depending on whether you're itemizing or not, so this is a really good question for tax reform. So we can stick with the status quo, where we keep the federal tax rates artificially high for all Americans, so some can use their itemized deductions, including city ones. And while we do that, we just subsidize each other. So rural communities, taxpayers subsidize cities, middle class tend to subsidize higher earners, low tax states subsidize higher tax states. That's the status quo. Or we can do something different. We can lower the taxes for all Americans, and we just pay our own. So for the first time, Washington doesn't punish or reward you based on where you choose to live and work. It is a big change from where we're at today. And the reason why, I think it's critical we find good solutions for lawmakers in the high tax states. We want their families to be better off being taxed.
All right, let me ask you a philosophical question about it. Well, after we're done, Susan Bonet, who's on the committee, Democrats can come here.
Great job.
And she's from the blue state, Washington State. On the panel after that, Steve Moore is on the panel. He's a fiscal conservative. So we're going to ask them, but there seems to be, you've seen the coverage of it. Are we punishing the blue state voters? Are you sure that there's nothing in this tax code that the politics are completely eliminated? We're not rewarding states that supported the Republican ticket, and conversely, punishing, using an incentive to get the state and local taxes to come down too, because those are no longer being deducted. Is that fair?
Well, I think this is political talent, so people go to political motives. I think in this case they're wrong. Because from a fairness standpoint, construction worker toiling away on the first floor of a building who doesn't itemize, has pretty modest income, is paying a higher tax rate. So the investment banker renting the highest floor can get a tax rate. Why don't we stop doing that? Why don't we treat them equally in the tax code? Why don't we lower those rates for everybody? So it is, in my view, certainly not from our viewpoint, the Ways and Means Committee, or in the House conference where we put the Better Way agenda tax reform plan at the beginning to go red or blue state. We want to dramatically grow jobs, paychecks in the U.S. economy, leapfrog us to that lead pack and do it in a way people are at.
One of the ideas that's been floated in the last few days about trying to make this, the state local income tax deduction more fair, trying to raise the revenue but not have the effects we're talking about now, is to put a cap on $400,000 is the number I heard. Does that sound about right to you?
400,000 in nice family.
In New York City.
In New York. I'll tell you, it stuns me how high property taxes, the sales taxes, the income taxes are in these tax states. I'm amazed. I don't know how families get by. And I'm always suspect of the same local politicians who've been assessing these high taxes are suddenly now concerned about taxpayers. My belief is that for those families, when we lower the tax rates, when we increase the child tax credit, when we set those brackets all together, we can lower their overall burden without having that specific deduction in there. We're listening, Carl, right now to lawmakers from those states on how best to do that. So I'm hopeful here. No, I'm confident here over the next 10 days that we're going to find some good solutions.
So when Republicans talk about tax reform, cutting corporate seems to be one of the most animating issues. And you know the arguments you've heard, you've made trillions of dollars of profit brought in corporations because CEOs don't want to pay, their companies don't want to pay the 35% tax rate. Donald Trump always reminds us that American corporations are the highest taxed in the world, and factcheck.org actually checked it out and said, yeah, that's pretty close to being right. But do you think, what's the evidence that cutting that rate will really bring all that money back here as part of overseas, and that it will convert to new workers, and that it will increase workers' wages?
Yes, so that's a fair question. What we know is your tax rate really varies depending where your business is at. If you're all American, stay here, sell here, you're paying full freight about 35%. If you're global, it can vary dramatically in those rates. But at the end of the day, they're all uncompetitive. China, Europe, Canada, and Mexico. So the Business Roundtable just released a study that shows if our tax rate had been 20% over the last decade, we would have 4,700 more businesses in America today than we have, because so many have been acquired or moved or shifted overseas in a major way. We know too that we have to change what we're doing if we want paychecks to grow. They've essentially been stagnant for decades. And even this last round, Carl, where it showed, I think, maybe 2.5–3% growth in wages, and you think, it's coming back. Look closely, because what it showed, people who work full-time in America, their paycheck increase again was zero. So we know if we make businesses competitive, whether they're competing around the world or on Main Street, when you do full and unlimited expensing, so they can invest in the plants, equipment, software, and technology, all that drive productivity, that drives wages in major ways. So we really are, in each of these designs, focused on the growth of paychecks and jobs. And I'm really optimistic that this design does leapfrog us back into that lead pack and makes our local companies so much more competitive.
All right, I've got one more question, and then I'll open up to the audience. Are you worried if this doesn't work, that it's a gamble, that the national debt doubled in the 8 years of George W. Bush, it doubled again in the 8 years of Barack Obama? If this doesn't spur the kind of productivity and growth you're talking about, this tax plan, you could double the debt again.
So I'm pretty sure the debt will double if we don't enact tax reform. I think we stick with this slow growth economy. We're not going to generate the revenues and growth that we need for the country. We also have to couple with restraining spending, and more important, we got to make the entitlement program solid. So this is one key part of getting our financial house in order. But I know this, we get growth back on track to our traditional level or better, it generates significant revenues, not just at the federal level, Carl, but we know from the Kennedy cuts, we know from the Reagan cuts as well, the communities that saw the greatest revenue growth were at the state and local level. Because when people go back to work, when the wages are higher, that's where the growth, I know there are some, states that wonder how will we be affected. What we know is growth gains at every level.
Right, I promised the chairman we'd get him out here in a timely way, but we have time for a few questions.